Welcome and hello and hello and welcome to this dramatic late night edition of Un Poco Mas. I'm having to hold the microphone up near my head so I can talk very, very quietly. It's extremely dramatic. Obviously, guys, the Sofi stock moved up about 2% on a red day today. It is wrapping up a Monday. I think it's 10:45 p.m. or something like that. Hello, Roland Dubs. What's up, buddy? Bottom line is this, guys. The Bears can put out whatever ridiculous revisions they want to EPS in the face of all evidence and logic, but Noto and team LaPointe are telling us where EPS is going, and there's a myriad of reasons why this stock is going up past 10 in short order and is going to settle above 12 and go up from there, not the least of which that's what options are telling us. Market maker activity is telling me that, you know, a lot of the smart people were saying the counterparties want to push this stock to about 12.50 to make that deal pay off for them in the biggest way possible. But why not push it back down to 6 and go ahead and load some additional shares if you know the stock is going to 2x anyway? Why not put some additional millions or billions in your pocket, as the case may be? Hello and welcome, guys. Welcome and hello. Thank you for joining me. I know it's very, very late. I had a lot of work to do today and just could not get a broadcast in. But I wanted to, there's just so much misinformation going on out there. Wanted to come on and provide some additional misinformation just to further stir the pot, confuse things, and, basically cause some additional carnage out there in the markets. Let me set this down, see if you turds can hear me. What's going on, Jeff Presley? What's going on, once again, Roland Dubs? Thanks, buddy. Thanks for joining me, guys. You guys are going to have to carry the comments because there's nobody else here. Here's the deal, guys. The stock moving up on very moderate volume is extremely bullish. Sorry, I've been on the phone a lot today, guys. Climbing on roofs. The stuff I do. The stuff I do for my valued clients is just heroic. Nothing short of heroic. But anyway, typical day in that it was really trading sideways and just slightly down all day. The difference was instead of selling off the first 45 minutes, the stock popped up the first 45 minutes. I think it hit, 780, something like that. So 793 is a key level, and I believe it's going to break down 793 probably tomorrow. There's just going to be tremendous buying pressure on this stock, and I'm going to explain a bunch of different ways why. It's not a gamma squeeze, guys. It's a short squeeze, if anything. I don't think it's going to be a dramatic short squeeze because, and they're even underestimating the short interest. Like Ortex had it at, around 17, and then when the official report came out, it was more like 18.5. So that's quite a big discrepancy. And then, more importantly than anything, is just the chart and the volume are telling me this thing is about to go way up. This purple line here becomes key because this is the first time at all that we've seen some consolidation above this blue line. It's really the first time it's broke out above this blue line at all and consolidated above. This is 793, this is 1013. I believe it's going right here, very similar to this move here. It's just a hunch. Options were pricing in a lot of volatility, a big move that didn't really happen just around earnings. But it doesn't mean this is a $7 stock just because, KBW says it is or Morgan Stanley says it is. I'm somewhere closer to $13-14 range. You say, well, how can a stock be sitting at half its value? I mean, there's a lot of reasons because, there was a lot of risk in the stock. I think a lot of people thought this was going to be, sort of a one-time profit, and then obviously 1 cent, 1 cent is not impressive, but I think Noto is focusing everything on this quarter, and you say, how do you make this dramatic move up in EPS? I think it's a lot more simple than people, but this is really key with this chart, guys. You see this red arrow pushing down and then this blue arrow pushing up, getting very, very close to each other. This is indicative to me that the stock is about to move up. Everything I'm seeing on this chart is telling me the stock is going to make another dramatic move upward. It's done so over and over again. It's been looking to break out above this blue line for, over a year. It's finally done that, and it's consolidating. They pushed down as hard as they could. That was all they had. It caught support again on this line, and it's going up. If I'm wrong, I'm wrong, but I'm certainly not hedging in that direction, and I'm just not wrong. This thing is going up. I said, Goldman Sachs is going to send it higher. Noto has Goldman Sachs absolutely running through its blood. If you think, the people over in those offices at Goldman don't see Noto here at Sofi and see an opportunity to make money, I think you're crazy. And people are like, well, why does Goldman like the stock? I don't know why they like the stock. I mean, because they know Noto is freaking brilliant. They know he's one of the top guys who's ever worked over there. And instead of going off to some, government position or going off to some, professorship, the guy's hungry. He's hungry for more. He wants to be at the absolute pinnacle of his profession, of banking, of finance. That's what he knows. He wants to be a master of his craft. He wants to be talked about like one of these guys, like, Peter Lynch or one of these guys that runs one of the biggest hedge funds. That's the caliber of person Noto is. He knows it. Everybody at Goldman knows it. Everybody at BlackRock knows it. Everybody on the street knows it. I mean, they know when this guy talks, it's not BS. The only guy saying that is like Gary Gordon because he's caught up on some, stock he got caught on that was selling like long distance phone cards in 1973. He's living down the West Village. He's like, I'll never forget it. Yeah, I bet you won't. Dude, you're living in decades past. Bell bottoms, like disco, calling cards. It's got absolutely nothing to do with SoFi. A lot of the bear case sort of against lending, against macro, it's like, well, it's a bad time to be in banking because people aren't saving. And by the way, because SoFi, people are saving so quickly at SoFi, it's a bad time to be getting deposits. Because you got to figure out something to do with those deposits. Like, what? How much nonsense are you going to spew? I mean, I'll show you what they're doing with their deposits. It's just not that complicated, guys. Cut through the FUD and go to the numbers. Okay, this is the end of second quarter 2023, 2024. Look at the growth in student loans. 400 to 736. Home loans 243, 416. This is before any rate cuts, guys. This is Q2. There hasn't been any rate cuts yet. There won't be any rate cuts basically all the way through Q3. If there's a rate cut, it'll be what, September 19, something like that? Look at the average, the average lending product. Personal loans went up from 23.7 to 24.7. That's their average personal loan. It's on a totally, totally different level than these other, payday lender, installment lender. This is 25 grand. Unsecured. This is why they're so obsessive about credit quality and why the FUD on that just never holds water. Average student loan is almost twice that size, 44,000, even much higher FICO score. That's why I think student loans is going to be the absolute sleeping giant that is going to propel SoFi into that next level in Q3 and especially Q4 going through 2025. Discover got out of the business. Everyone else has basically ceded the ground and said, here, SoFi, take these premium student, because we don't know when student loans are coming back. We don't know if the pandemic's going to be over. We don't know when M&A activity is going to pick up. And plus, it's not that great a business anyway. And what do I mean by that? I mean, look at the margins. I don't know where exactly this is. It's in here somewhere. But if you look at the margins they're getting on each, I don't know exactly where it is, but I basically can tell you from memory. Like, I think this is it. Yeah, this is it here. So personal loan, student loan, and these numbers, as you can see, didn't change that much quarter on quarter. The annual default rate stayed right at 4.8% for personal loans and 0.6% for student loans. So the notion that SoFi's loan book is falling apart and that defaults are increasing, Lapointe said, these things peaked early in the year, and they're seeing them, slowly reduced over time or hold steady. So you're just not seeing that sort of black swan event loan book fall apart. It's just not happening. And you see strength in the economy and you see inflation coming down. So you see sort of an ideal case building for SoFi through 2025 and 2026. The SoFi wheel has never had a chance to work with demand. They're just getting these products online. They've never really had their credit card product online. Since they've been a public company and had any growth, their student loan business has never really been there. And student loans are going to be hugely important. But what is really the gasoline? The gasoline is that people are going to need personal loans more than ever, or they're going to want them more than ever. They're going to see these more attractive interest rates. They're going to see their banks not offering them any reduction on credit card, particularly if they're in some kind of default payment. But if they have not a default payment, but an increased rate due to late payment, something like that. I mean, you can forget a payment, they'll raise your rate way up, and that'll be, huge incentive to go get a personal loan if otherwise you have, good credit history, good income, etc. But look at the margins. Look at how great a business this is. Maybe why some of these people got out, some of these companies got out of the student loan game. So the weighted coupon rate, if you just blend everything, went from 5.6 to 5.7. Default is about, 0.6. So you're making about 5 points, 5% interest. And then on personal loans, you're getting about 14%, and that's obviously going to come down a little bit as interest, but not much. I mean, with an unsecured personal loan, you're still going to be well into the double digits. And the default rate is holding below 5%, and they're planning for higher than that, but it's better than they're planning for. So you see the margin there is going to be close to 9%. Versus 5% on the student loan. So where should they deploy their capital? They haven't deployed it into the personal loan because that's been a risk-on move. But that's about to get much, much less risky because you're not going to have, people taking on additional debt. They're going to be refining that high-interest credit card debt. Perhaps high-interest personal loans they got somewhere else. They can refi those. You can do whatever you want with a personal loan. I mean, that's why you're paying that higher interest because it's unsecured. You can go out and buy, crack with it if you want. Buy a new set of golf clubs that you're never going to use. Maybe a Peloton bike that you're going to use to dry your laundry. Because you can't afford dry cleaning anymore because you got that fucking Peloton bike. And you're still doughy. You're not heavy, but you're skinny fat. You know you are. So you can just look at the lending capacity SoFi has on their balance sheet, the cash, and if need be, their warehouse facilities. Now, Noto said they save about 2 points or a little bit less than that by, financing their own loans with deposits rather than, employing a warehouse facility. But you can see if the margin, the net interest margin they're making is 9%, even if that kicks down to 7%, if they can control the risk and mitigate it, that's still a hell of a good business. I mean, other banks, their blended coupon rate across everything is like 3%, 4%, these mega banks. So, and the other thing that people are not really realizing with this sort of EPS, people are kind of puzzled. Oh, how are they going to go from like 1 cent to 5 cents and 4 cents, whatever? I think it could be 5 cents easily. They're going to put their foot back on the gas with these personal loans. And with fair value accounting, that's going to spike the books with the originations. Fair value accounting, these doom and gloom sayers, these, oracles with five heads, who talk in circles for 90 minutes like they're, willow up good, like fucking Legend of Zelda. Oh, Legend of the Bologna Sandwich. Oh my God, what the hell am I talking about, guys? Hello and welcome. But you can just see this lending business for what it is. I mean, tech's doing pretty well. I mean, tech accounts grew year on year 23%. That's kind of the growth rate they're shooting for, that 25% area. So that's not bad at all. And we haven't seen any big accounts come online. And we're going to see those big accounts. If Noto's timing everything and people are like, well, I was one of these Karens. I'm like, why are they trying so hard to make a profit in Q4? And then why are they trying so hard to maintain that? And a lot of people knew that, and I've made videos about this, so it just hasn't been on the front of my mind. And that's S&P 500 inclusion. I mean, that's what's going to push the stock up and keep the stock up in the double digits forever. That's going to allow more hedge funds. That's going to allow more mutual funds to buy the stock who don't buy stocks under $10. But what do you need to be there? You need a market cap of approximately $16 billion. Okay, just put that one, in your back pocket. So you need to be a publicly listed company. Of course, 10% of the float available for public trading. That's no problem on Sofi. We all know there's, at least 40% of the shares or more. All these other requirements are basically sort of, way below where Sofi is. So these are no problem. But the company must have positive earnings in the most recent quarter and over the previous 4 quarters combined. So if Sofi could somehow get their market, and that market cap is not, as I understand it, a hard and fast rule. There's like a committee that decides these things. So it's not necessarily a hard and fast rule or a ranking purely by market cap. There's different factors that go into the decision, but they're not going to get in with a market cap under 10 billion. They're not going to get in with a market cap like 12 billion. You're going to have to be up there. So they're going to have to get the stock up. How do you get this stock up? The way you get the stock up is a dramatic announcement on tech combined with a dramatic ramp in EPS combined with a rate cut that creates an explosion in demand for your lending products that then create a massive spike in terms of the front-loaded fair value accounting in Q4 into early 25, and this just rolls on top of itself. And you could see S&P 500 inclusion at this rate as early as 2025 if the stock price can get up around that, sort of $13 level. And why do I say $13 an important level? Well, look at where Morningstar has the fair value of the stock. It's around $13, $14, something like that. So it's by no means obscure like, well, you think the stock's going to double? Absolutely, I think the stock can double. I mean, do you guys forget basically that, this stock was, I don't know where it was. It was at $28. I mean, take a max view of this thing. I mean, the stock to double has to get to, around here. It's like just above where the stock spiked recently, like just over a year ago at 1160. So the notion that the stock can't get back up to 12 is just ridiculous. I mean, the stock's trading right now at like 3 times this year's sales. It's so low. Next year's growth is probably going to be in the 30s. But like, are you crazy? The 30s, they're saying it's going to be 15%. Come on. They brought that down on purpose. They just did enough to make that 1 cent. The market was giving them nothing, and they were all fine with it. Market makers were not going to buy this stock at 12. They're not going to pay, every penny the stock is worth. It's like if you're a used car wholesaler, you don't go on like Craigslist and pay full retail to some jabroni who's like selling his car that he waxed every weekend. Bro, it's a Mustang 5.0, bro. It's a manual, bro. Hey, grandma, make me a sandwich. Like, you know, you can't pay full retail if you're a professional in that business. Like, if you're a market maker, you don't pay the same price as Joe Sixpack paid in the SPAC deal with Chamath, where he gave free Zappos to native people in Switzerland. Well, for every, SPAC I rip off unsuspecting retail investors in, I get designer shoes for very wealthy people in Stockholm and Switzerland and various capitals of Europe, and I feel great about it. I feel really good about me and my billions of dollars I've made. Some of these SPACs. Oh, anyway, guys, I'm exhausting. I'm exhausting myself. But put the pieces together, guys. Look at the official short interest, and then why does Vortex get this thing so wrong? What's going on in the dark pool? Look at the increase. This was just released yesterday. Shares short went from 181 to 193 million, 18.5. Days to cover 5.23. There's no covering today, guys. Look, they're borrowing again after hours. Look at these peckers. These Black & Decker pecker checkers. What are these guys trying to do? And still, cost to borrow average is less than 1. There's no gamma squeeze there. There's buying pressure. What are people willing to sell the stock at? I mean, that's the question. They're not going to get margin called at 0.68%. There's plenty of shares. Over 10 million shares available. So it's going to be that confluence of events, that perfect storm, that George Clooney meets Mark Wahlberg, meets romance, meets tragedy, meets the sea. Oh, brilliant, brilliant. Oh, so dramatic. Anyway, so it's not going to be a gamma squeeze, guys. It could be a semi-short squeeze. I mean, it's not going to be like a strangle you type of squeeze. It's going to be like a big hug type of squeeze. But it could still lead to additional buying pressure, sending the stock price up. A lot of it depends on if retail's willing to dump or if retail's willing to hold. If retail could diamond hands this thing, you could definitely see a good old-fashioned, sort of a mini short squeeze. I think it could squeeze up, to 12, 13. It's not going to squeeze to 25 or any 20 or anything like that. It's just too many shares out there. Retail's far too weak for that. This ain't GameStop, guys. You gotta stop kidding ourselves. This is fundamentally an excellent company with excellent management. We don't need games. We don't need gimmicks. You could be a SPAC. You could be, sort of a meme stock. You could be a retail favorite stock and still be an excellent company that's going to make a lot of money with really good management, a great business model that, the market makers are smart enough to see what this company is and know that their business model is about to start working. And it's about to start spinning off net profit. EPS is about to go from 1 to at least 4, and I would say probably more like 5. Because I think what they've been doing is originating more personal loans. Everybody's saying they're getting the personal loan offer. People that weren't getting offered the personal loan before are getting offered the personal loan now because they know they can sell off the loans, mitigate the risk with absolutely no problem. They don't have to take on all that risk themselves. And plus, they can pick the very best of the best when it comes to making personal loans. So Noto has put Sofi in an incredibly good position, done just enough to keep the company profitable, making them eligible for S&P 500 inclusion if they can get the stock price up, which will lead to a ton of buying pressure on the stock. They'll be included in all sorts of index funds, and they'll just have to, start buying the stock. And the market's going to get tight. And over that period of time, you have to believe some of these shorts are smart enough to cover fundamentally. Shorts are not fundamental traders necessarily. They're not necessarily momentum traders either. They're never trading with their own money. It's house accounts. That's not how this stuff works. All these guys online that say they're shorting the stock, they're shorting it. Maybe they have a put. Probably not. Probably have a thumb up their butt, if anything. Oh, hello and welcome. Welcome and hello and hello and welcome, guys. It is Un Poco Mas, the show where we feebly attempt in the dark to give you just a little bit more, guys. Just talking about shorts giving up on the stock. That's essentially what you see happening. Index AQR Diversified Arbitrage Fund Class N. I love that fund. I loved what they did with their Class L fund, but their Class N fund, that's a real party. Okay, they reduced their shares 66%. They're shorting the stock. Another short opened up there, but some of the shorts are actually getting out of their position. These shorts sold out. We have Truist actually. What did they do? They decreased their shares by 8%. So they still have about $1 million worth of shares. That was where Andrew Jeffrey used to work when he used to give us that good rating that that sweet buy rating that we need oh so well. Of course, we have Goldman Sachs here with the equity dividend. I'm telling you guys, I heard the chatter. I know people might think I'm crazy. I'm Charlie Kelly searching for Pepe Sylvia. Goldman Sachs increased top line estimate for this year to 2.52. Who is there? What does Goldman know? What signal are they sending to the market and to their clients and to counterparties? They know Noto better than anybody at Goldman. Look at the estimates. I'm not making it up. They were revised up, I think it was maybe 4 weeks ago. Just look it up. You can find it. It wasn't well publicized at all. But if they're correct, then top line growth even this year is going to be well into the 20s. It's not going to be 18. I mean, Noto and team were saying like 18 to 20. Top line growth what if it's 23%? What if it's accelerating into next year? What if the wheel has a chance to work? You cross-sell these products, the customer acquisition cost per product, is diluted. It's finally some dilution that helps us. That's what cross-selling is. It's basically free sales. You have data on these people. Hello and welcome, and hello and welcome. It's Un Poco Mas After Dark. It's a Sofi stock. Welcome and hello and welcome. Sorry. So I think that was really about all I had, guys. Really good article, actually. This guy is right in line with where I am. This is Yanis Zorpanos. Sorry, I butchered that name, but he goes through and he does some TA. He does cautious optimism. 2024 rebound in 910. I think he's being very, very conservative. He's talking about the loan performance and how tight credit risk management drive profitable growth and improve efficiency. So you guys can go through this by yourself, but the part that I wanted to look at was forecasting 22% revenue growth and 26% EBITDA margin for Q3 2024. So SoFi expects adjusted net revenue $625 million, $645 million. That'll be growth of 18 to 22%. They always beat to the upside. 22%, consider that the low. It's probably going to be 23, 24%. Bottom line, adjusted EBITDA will be within range 160, 165, margin of 26%. Decent operational profitability. That's why I think it's going to be better than that. I think, they reduced the headcount. I think they've been doing everything possible to trim costs, become more efficient. Net income between $40 million, $45 million, a diluted EPS be 4 cents, represents improvement upon specific prior metrics on performance. While the EPS is small, it is the first of many steps towards shareholder value that's required. I mean, it is small, but when you're coming off, 15 million or whatever it was, it's pretty good. Because we have not seen a rate cut yet, and we will not see a rate cut basically except at the very, very tail end of Q3. So he goes through that and he's talking about, where he thinks the stock is going to be, where he thinks Q3 is going to be. Upward revision in revenue expectations compared to the company guidance. Adjusted net revenue may grow 17 to 19%. However, per previous guidance, the top five was projected to hit 15 to 17%. Now, they did reduce a little bit on the tech side, which is never good, but that reduction could allow them to set up an even bigger beat if they have, an ace up their sleeve, which they could. That ace could be Citibank. Who knows? Could be some kind of announcement. I know American Express doesn't necessarily need their help with technology, but obviously there's some kind of tie-in happening with SoFi and American Express. What's happening? I don't know. Who am I? JJ? I know Mike. Net income EPS. So you guys can go through this yourselves. We already know all this. Tangible book value by $1 billion further strengthens SoFi's financial position. It's a bank and it's a tech company, and those things work synergistically together. But more importantly, it's a very, very successful lender with a high interest rate. But I think even more importantly is that Goldman Sachs estimate 2.52 instead of 2.43, 2.45, because that marginal additional revenue, a lot of that flows right to the bottom line because SoFi is a fixed cost company. There's not a lot of marginal costs. When they get new members, they don't have to open new branches. They don't necessarily have to open new data centers. They are set up for growth. They're planning to grow. I don't get it. I don't get valuing this company 3x this year's sales. 26% EBITDA margins, that is going to flow to the bottom line as they scale. This company is going to make a lot of money and it's going to scale. It already is scaling. People like the company. They're still, people were kind of disappointed, myself included. They only increased deposits by $1.5 billion or whatever. Everyone else was losing deposits. You have to look at these things in context. And that's what I'm saying. Defaults are not increasing. Look at the argument bologna sandwich makes against fair value accounting in context. Fair value accounting is saying, okay, when you make these originations, it blows up the earnings because you're putting this increase in the value of the loans initially. Because over their life, they're going to be worth more. So you're taking that up front. Well, originations are about to explode. So what happens? They get to increase those values up front. Fair value accounting is going to spike the books. Douchebags. I mean, what can't people see? The defaults aren't going up. Originations are going to go up massively. So which is more important? The back end or the front end? Business in the front, party in the back. Mull it over. Mull it over. Anyway, guys, that's about all I had. It's a pretty good article. Please, guys, read the data. Read the growth year over year, quarter over quarter. Look what's about to happen quarter on quarter and year on year in Q3, and then even more importantly in Q4, going into 2025. This was a transition year. 2025 is going to be the year where the transition is over and we start just making a lot of profit. I mean, I still think the tech transition will be ongoing toward onboarding these bigger clients, but I think the clients are already there. The wheels are in motion. The check is in the mail. Anyway, guys, that's about all I had for you turds. Let me go ahead and take a look-see at some of your comments, see if you idiots had anything to say. This is kind of what I think is going on with the chart. I mean, if you actually kind of look at this, it popped up to right around 780, 775, and then it's trading sideways and down. This whole dip down here was just a manufactured anomaly. It's here, guys. I mean, I don't know what you can't see. This algo is so freaking obvious. It's right here. It's coming here. It's like Tony Soprano. Don't you see? It's Bobby Galavazapa. It's like, what, T? I'm asking for some gabagool. Don't you see? It was pussy all the time. It's like, T, what are you talking about? Why are we always wearing warm-up suits? See, don't you see? It's so obvious. He's like, Tony, you're about to faint. Relax. This was just a manufactured anomaly down here. This is setting up to go higher. This is consolidation in this new channel. It's never got in this channel before. It's in a new channel. It's not a level. It's not a horizontal line. It's where the algo has traded it. It flattened out here. It's stepping up here. It's going to move up, turds. It's going to move up to this area, and it's going to do it quickly. Market makers are buying a lot faster than people think. Look at those Q2 filings. What do you think's happening now? It's only accelerating. Dum-dums, this is not in real time. Don't you guys get that? This is not in real time. Come on, look at this. What do you think's happening right now when we get these filings? I don't get it. Less and less shares available, more and more reasons to buy, shorts over 18% having to cover, having absolutely no thesis on why things are going to get bad for SoFi in the near term, because they're not. They're not. What are they seeing? Credit quality? Balance sheet issues? I have a tiny wang? Can't afford child support? Like, that's not an argument against Noto, SoFi, LaPointe. It's not an argument against this business model. SoFi's crushing. It's like Big Pun. SoFi's not a player. They just crush a lot. Can't blame them. Oh, what's up, Tommy Gunn? SoFi After Dark. LOL indeed, sir. LOL indeed. Poignant words. Poignant words from the great Tommy Gunn. Welcome and hello, turds. Welcome and hello. Let's see who's with us. Let me get into my sensual after-hours voice. It's Rolling Dubs. It's Jeff Presley. Looks like a lot of man meat here. Looks like a huge sausage fest. Jeff, of course, welcome and hello. We got DVD. Thanks for the late night stream. Of course, thanks for joining us. We've got Elon Musk News Network. Am I taking profit at 14? I'm always taking profits. My entire life is profits. It just depends. I mean, if it pops to 14, like doubles overnight, yeah, I'll definitely take profits. But that doesn't mean I'm like out of the stock long term. Just take profits. I mean, I'm going to flip downward. If it pops to 14, it's going to pull probably back to somewhere, I would guess 1043 or something, 1050. So you have to think you know what it's going to do. You're probably completely wrong in my case, but you have to act. You can't just sit there and watch it go up to 14, watch it go back to 9, and just, got your crank in your hand and no profit. If you never take profits, you don't win at this thing, because stocks don't go up linearly. I mean, I know Buffett's right, and I know the long-term people are right, and you just buy, hold, average, average down a little bit harder on the dips, you'll be fine. But if you sell when it goes to 1160 and then buy those shares back at 8, you're going to get a ton of free shares. They're going to be much, much better over time, but you just have to be careful, and you have to know what you're doing. Because if you don't know what you're doing, you're going to get, it's like Dennis Hopper running a picket fence app. Just don't get caught watching the paint dry. Shooter, one of the greatest characters in film history. Shooter from Hoosiers. Love me the film Hoosiers. Kind of where I got the name Jimmy Chitwood for that dude who has the kid and play haircut, who does the SoFi videos with the synthesizer. Midwest Values Futures stock, trending stocks, I believe. Great channel, by the way. If you haven't checked out, check him out. Does some great SoFi technical analysis, etc. JBJ, hit the like button. You take it back, you bastard. Palacio Furniture. Buy Palacio Furniture. Guys, buy Palacio Furniture. Google that shit and buy some. Palacio needs your support. He's selling furniture. And he's named Palacio. That's really all I know. Buy you some. I'm seeing at least 5 cents. I'm with you. I think we're going to hit 5 cents, Jeff. And if we do, I'm doing the SoFi Rock Opera, bitches. That's all there is to it. Been holding the past 3 run-ups and haven't sold. Yeah, I mean, I sold 10,000 shares when it hit 1160. I had a lot of shares at that point, like a stupid amount of shares. But I sold some, and I moved into some other stuff Tesla at the lows, and I flipped that back into SoFi recently at like in the low sixes, a lot of that, and some I bought at 707. But in any case, guys, this is very compelling in the sevens for me. I think this stock is definitely going over 10. I mean, when I say definitely, it's just my opinion. I realize it's not no sure thing. It could definitely go down. I just like saying the word definitely. I don't really mean definitely. Just in my opinion, I think it's going over 10. I could very well be wrong. I usually am. Yeah, restructuring loans at lower rates. I mean, the entire, if we get like half a point, which I don't think we're necessarily going to, I think it's going to be a quarter point personally, because I think the economy is looking a little bit too strong. I think that's absolutely fine. And we don't need all the demand to come in all at once. We don't need to wipe out all our balance sheet, blow our load all at once. Let's see. Here at the casino listening to Danny. Yeah, man. If you want to know where the real gamblers are, the real players, they're in the markets. That's where the trillions are. You guys are over there playing for red chips, struggling to get a free well drink. Let's see. That's one of my favorite things about hardcore pawn. It's like, this is my grandma's ring, man. It means everything to me. Oh, man, I love my grandma. He's like, okay, what are you doing? You got to pay your rent. He's like, nah, man, I'm going to the casino. Les is over there just like shaking his head. Oh, man, love me some hardcore pawn. Hey, with our 6 foot 8 inch bouncer, Ed tinted beard, he looks like a freaking fire hydrant. Looks like a human fire hydrant. Yeah, let's get in an argument with these two guys. Why not? Get me one too, Steve. Going to run up until rate cuts. It will dip back to 650 when it hits 8. Totally disagree, Tommy. What's going to push it back to 650? Just shorting it? Think traders are dumping? I don't think there's a lot of retail traders or swing traders left in this stock. I think people want double digits. I don't think a lot of people are willing to dump in the sevens here. I don't think this is dumping. I mean, on 31 million, the algo was working hard today, Tommy. Tommy. I don't know how to pronounce that. Tommy. But no, I totally disagree with you. If you look at where the algo is, there was basically nothing going on today. I mean, there's a few orders here, but this is basically the algo working a shallow bull. This is old-fashioned stuff. I mean, why aren't they pushing down? Why aren't the puts saying they're going to push down to 6? It's just, where are you seeing that? The options would be telling us that, but they're not. Yeah, there's just absolutely no action down there. I mean, there's some action at 650, but I think that's pretty old. I don't know. Maybe they could. I mean, market makers could certainly push it back down there if they wanted to. I don't think they want to. I think they want to accumulate and push it up. And I think that's how they're going to make the most money. So we'll just have to see. I don't know. Obviously, I don't know what's going to happen. I don't have the kind of money to make those kind of decisions well above my pay grade. It's charted travel. The numbers don't lie. Q3 is going to be a liftoff. Q4 printing money. We say that. I think the results are going to be there, charted travel, but that doesn't necessarily mean the stock price is going to do what we want it to do. Let's see. Tommy Gunn is obviously somewhat bearish. I think it's going to hit a max 850, then sell off Thursday or Friday with unemployment data, then run back up. You could be right. I mean, that's certainly possible. I mean, that would be in keeping with the volatility that we see from the stock. Oh my goodness, we have U-Turd royalty. It's the Savage of Wall Street. Yo, 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 SoFi to the moon. $30 a share end of the year. I would love that. I will be a multi-millionaire. Well, I already am, but yeah, I don't think it's going to go to $30. I could see 12. I mean, I don't see any reason it can't go to 12, but I think probably, settling in somewhere 1050 might be realistic as far as the bull case this year. But I think it could definitely pop up to say 12 or 13 and, pull back, settle in just above or below 10, but we'll see what happens. I don't think it's going to go to 30 this year, but a crafty option salesman like Savage of Wall Street could certainly peddle that garbage. And he could certainly do so on my channel. I'm open to people peddling whatever they want. Go ahead and add a vertically colored line to your chart for the breakout. Yeah. I'll try to find my crayons, Jeff. What's going on, Savage? Hope all is well. I don't know if you already went on your vacation, your staycation, because I think you said you are from Southern California. But your Waldorf, that sounds like a lot of fun. I wish I could do that. Too busy working my balls off. But anyway, if you went, I hope you had a good time. Buy calls, it's going to the moon. Buy Lambos. Dude, I don't want a Lambo. I want another Chevy C10. I already have some, but I want more. I could buy a Lambo, but I can't really fit in one because I'm portly. Not sure why I'm here, but Danny seems fired up. I seem fired up. Bueller, anyone? Bueller. This is me fired up. Cum Rocket is here, doing what Cum Rocket does in the privacy of his own home. What's up, Cum Rocket? Just got off a shift as a nerf. Now backing Cum Rocket. Savage is selling calls again. Buy calls, $8 and $9 calls for November. Buy $10 calls for January. I'll buy $10 calls for January 2026, maybe. But I'm really buying fives. I got a ton of $5 calls, leaps. And I'm going to make a ton of money on those guys. I don't think Savage is selling me any of those because he's not an idiot. These are market makers that were betting on something that they were wrong about, and I was right. And I'm going to clean their fucking clock for a lot of money. A lot of money. I sold 26 calls at $20 strike. Man, who's buying $20 strikes? I don't know. How much did you get, Cum Rocket? Just out of curiosity. Savage, you maniac, $45. I don't think it's going to hit $45 by 2026, guys. That's not that far off. I mean, the end of 2026 is just less than 2.5 years. And you'd be talking about, you'd be talking about 6x plus. 6x gives you 42, 7x gives you 49, so 6.5x roughly in 2.5 years. I don't see it. If the tech explodes, then I can see it. But it's got to explode. You're not going to get that type of growth just dramatically growing your profits as a lender and financial services company. The growth isn't going to be that dramatic to generate that type of, share appreciation. I don't think. I mean, if it goes to 45 again, I'm over it. You guys are never going to see me again. I'm going to be above the law like Big Ernie McCracken. Double D's, refreshing break from Tanner and that Canadian cock broom of a mustache. Tyrone Jenkins. Okay. I personally love Tanner. He made me a ton of money on New, and he made me a ton of money on Shift 4, and I'll credit Steve for making me a ton of money on PayPal. So just those 3 stocks alone, I just listened to them. I did my own research, and I'm up a ton of money on those guys. So I don't want to talk any smack. Yeah, the facial hair the Canadians employ is unfortunate. I don't know what they're doing with that high lip cut, but hey, whatever. 105. Shut up, Savage. Now you're just poking fun. Now you're just having fun with us. 105 by 2026. You know what real men do? They buy calls. Be a real man. Have balls. Buy calls. Savage, your bit's wearing thin. The Bears have been defeated. Danny, you won. The Chia Pet is finished. I mean, right now, but I think things are looking quite good for SoFi right now. But things, as you know, Savage, things can change very, very quickly. The director at SoFi announces a dividend and a share buyback. Yeah, they're not going to announce a dividend. They're not going to announce a share buyback. I mean, I don't know if you've taken a look at the books and what they do for a living, but they need the money to originate loans that are going to explode. Yeah, it's just not a good use of their money to buy back their shares. I mean, if their shares were at like 3, yeah, I'd say it would be a good use of their money, but not at 8. I don't like it at 8. But anyway, good thought, Director. I appreciate the comment. Ross, doom scrolling on the old stock Karen is on. Very nice timing. Thanks for joining me, Ross. Appreciate it. 43 and 44 per contract. Okay. That's more than I would have expected. Interesting. Okay, yeah. I don't blame you because you can roll out of it and, If you get a little dip here, you can roll out of it, or if you want, or I don't know. I don't know what your plan is, but okay, yeah, that's pretty good money for a $20 strike. SoFi $20 strikes are going for 45. Yeah, okay, that's what he's saying, Savage. Yeah, that isn't too shabby. I agree with you. 4,500 just for holding your shares, free money. Um, well, I mean, I don't think it's at all out of the question that the stock could be above 20 January 2026. But obviously, again, you can close out your position or change your position as you see fit. But yeah, I don't know. I wouldn't be surprised at all if the stock's at 20 January 2026. But again, that is quite ambitious because you're talking about not a 3x, but like a 2.5x in under a year and a half. It'd be quite unusual, but I think again the stock is dramatically undervalued from where it sits. So if the stock was at a fair value right now, I think it should be sitting at around 12 or 5x last year's or 5x this year's sales. I think would be quite reasonable, and I still think that could even be considered low. I mean, you look at where a stock like Palantir is trading. I mean, Upstart's been a bit of a short squeeze, but they're not really covering as much as you'd think, given the price action. People are just buying the stock based on the fundamentals, but I think it's just complete hype. I mean, let's at least see the turnaround quarter. So, so far, sorry, Freudian slip, SoFi, but so far, all they've done is give guidance for a turnaround quarter. They haven't even achieved the turnaround quarter. SoFi just pisses excellence, and the market just takes a dump on our chest. All we can do is say, "Thank you, sir. May I have another?" Oh, anyway. I'm Canadian. Well, Alberto. Well, come rocket. Who cares? Fucking nurse. Male nurse. Fokker. No, nurses are great. If you're really a nurse, yeah, nurse is probably one of the most valuable fucking professions we have. Make the whole healthcare system run. I don't know how the healthcare system in Canada. People complain about it. Other people say it's great. I don't know. I got the fucking Obamacare. It sucks. They don't pay for anything unless I'm dead. We're not Palantir. Stop. We're also not going anything until Toots own at least 55. Well, you guys were saying like 50% before. Now that it's like 55, 50% is coming up. You're saying 55. But no, I don't think we are Palantir. I'm saying look at the multiple. Palantir's market cap, Savage, is like near $70 billion. I mean, SoFi's market cap is 7. The sales are about a year behind. I think the margins will ultimately be better. I'm not saying we're ever going to get the multiple of Palantir. I'm saying this is why I'm buying SoFi at these levels, hand over fist versus Palantir. Now, I'm not buying at these levels because I just bought a ton in low sixes, but I bought about 17,000 additional shares. That's how much I believe in the company. And I'm not any type of like Lambro, super wealthy person. That's a lot of money for me. A lot of money. I work really hard for it, swinging a hammer. But I just look at the business model. I look at the management. I look at the margins. I look at where things are going, and then this huge, incredibly potentially valuable wild card in terms of tech. And I just think it's one of the most compelling values I see in the entire stock market. It's not to take anything away from Palantir. I think it's an incredible company. But I just think it's overvalued, personally. I mean, nothing where I'd short it or anything. I don't have those kind of balls. Don't get me wrong. Not even fucking close. I mean, I'll short Upstart. I'm already shorting over the put. I'm losing my ass, but I'll be fine. I gave myself a hell of a lot of lead time, as I always do when I'm on the wrong side of options. Anyway, assholes, I'm losing my voice. I don't think anybody's watching. Let's see. Don't listen to Goldman Sachs and douchebag targets. No, I'm not. I'm not necessarily looking at their target price. That's all a fugazi. I'm looking at their EPS estimates. I'm looking at the actual work they do, the actual math. And Goldman Sachs knows how to do math. Trust me, they hire the very, very best people out of the very, very best schools. I've known plenty of people who've worked there other than invest with Henry. Any companies other than SoFi we should look? Oh yeah, I mean, there's a lot of companies you should be looking at. I've been buying CRISPR. I was buying UBX heavily when it was down at the lows, like I think 120. I love that company. If they have some big readout coming in 2025. There's a ton of companies I'd be buying on dips, but I mean, say big tech to me is just overvalued right now. I just ran Chase up from like 130 to 215. I mean, it's like Bank of America. I mean, there's a lot of really good companies. I mean, you can buy like Buffett, you can buy Occidental, you can buy railroads, you can buy Chevron. I mean, you could buy Costco. It's just, it's to me, again, a little bit overvalued for what it is, but there's a lot of great companies out there, but you pay for them. I mean, if you're going to find a diamond in the rough, you definitely don't want to be looking at penny stocks if you have any common sense. But I think a company like CRISPR is really undervalued. I mean, you look at their partner, Vertex, and I've owned that company for a long time, also smaller position, but I just increased my CRISPR position pretty heavily down, I think 45 or I don't know. But I think that stock's worth 80 all day. They have a really nice cash position, and their pipeline is incredible. The stuff they own themselves, not even with any partner. So if one of those hits it big at all, it's just extremely undervalued. I'd take a look at CRISPR. There's a lot of other companies I could go over. I mean, I wouldn't necessarily, I would buy NEO above Tesla right now at these levels. I mean, I own a lot of both, but I would buy NEO at 4 above Tesla at 220 until we get some clarity on how and when FSD can be monetized, how and when Optimus can be monetized, how and when Semi is going to be effectively monetized, how and when the economy car that I don't even think exists is going to be monetized. And I am bullish on Tesla in terms of their battery technology, their chips, their engineering, their supercomputing, their FSD, their AI, all that stuff. I'm not bullish on them following timelines and getting vehicles out in a timely manner. At a really high quality standard. I think the Chinese are just absolutely cleaning their clock. So in the sort of the near to midterm, I'd rather buy NEO at like a $9 billion market cap than buy Tesla where it is. But that's not to say I'm dumping my Tesla here. I'd have to dump Tesla at like 300 again. But I'd buy more again all day at 150. But that's the thing. People are like, the time to buy a quality company is now. That's not how I look at the market. I look at a stock like Tesla that jumps from 120 to 300. It's a great company, all right, but I'm not going to look at the buying decision the same at 300 as I am at 120. I'm just not. I'm a buyer one area and I'm a seller at another. I'm here to make money, guys. I don't give a fuck about Sofi. I don't give a fuck about any of you. This company was absolutely absurdly undervalued at 4 in the 4s, and I was pissed off about it. I think they fuck with companies that are doing the right things and doing right by their customers. And, I just get a little bit pissed off. I get my back up. I'm a huge Karen. And so I decided to start making these stupid videos. And some of you stupid idiots started to watch, and so here we are. But doesn't mean I'm in love with this stock. I mean, if Sofi went up, like I said, when it went up to 1160, I sold a few shares. If it spikes up again, I'm going to sell again. It's going to pull back. We know it is. I know how the stock behaves, and I'm going to act accordingly. I'm not in love with my shares of Sofi. I'll, happily buy Microsoft or Tesla or Chevron or, whatever. Or CRISPR or something else. If the stock gets up too high where I think it's overvalued, I'll tell you that. But it would have to go up a hell of a lot. Because I think, even 10 times sales is not absurd at all. Because I think the company's going to grow more 25, 30% growing forward, not 15. And if growth is almost double what they're projecting, their projections are completely erroneous and irrelevant and useless. As most analysts tend to be, as is their wont. Nicholas Youngworth, good to see you. What's going on, Nicholas Youngworth? Yeah, CRSP, really like the stock burnt games, have a huge position. But I'll do another video on that one, kind of introduce you to it. Look at Unity, RX, C3 AI, Roblox. See, Roblox is an interesting company. Riot, that's blockchain new. I have a really big new position coming. Average cost under 10. Thanks to Tanner. Yeah, I wouldn't necessarily buy new right now. But yeah, if it goes back around 12, I would be a buyer again. But yeah, my average is pretty low. Again, thanks to Tanner, got into Shift 4 lower. Thanks to Tanner, got into PayPal in the lower to mid 50s. Thanks to Steve. So, but I wouldn't buy all those same companies now. But yeah, Savage has some interesting companies if you guys want to take a look at those. Looks like they're sort of the cutting edge. Savage is on the cutting edge. Clean Spark, interesting. Clean Spark, don't really like that one. I haven't taken a look at CleanSpark in a little while, so there may be news. It'd be interesting to see what's going on with them, Tommy Gunn. What do you have for a crypto pop? Crypto top? Oh man, that's crypto. Crypto behaves like a fire. I mean, it's very very hard to predict where crypto is going to go. Why is crypto up? I mean, it's not really tracking gold. It's not really tracking a currency. It's sort of just tracking the mood of younger people with money. I don't know. I don't know much about crypto. I have a little bit of Bitcoin. I have a little bit of Ethereum. That's about it. So I don't really have any expertise on crypto that I could share with you. Perhaps Tommy Gunn is the crypto genius around these pots. Pots unknown. So anyway, I pimp Sofi every month. Got to pay to stay on my roster. I don't know what that means, Savage. It's funny you guys are selling like calls. I mean, I don't know. Some of you, I guess you're selling longer term this time, but a lot of you guys were selling 750s, and I mean, you didn't really do that well this time. A lot of the option sellers got kicked right in the nuts with this little run here this week. So I don't know. We'll see where things go. I think it can easily pop above 8. And I think, the call sellers are going to get hurt. Again, I don't think it's going to lead to a gamma squeeze or anything. It's not going to be like Seth Rogen panicking with his gap tooth. But, I mean, they could definitely see some losses and see some covering. Who knows? I mean, they can push the stock back down. I just don't know what's going to happen. Obviously. if that's not painfully obvious. But yeah, Savage, he's selling options, and that's how you make money in this game. So if you're gonna play options, you want to sell them. That's why he's telling you to buy them. It's reverse perverse psychology. Guess what toots are at? Guess when toots are at 50% of SoFi? I think they're well above 50% right this second, Ross. I mean, Q2 filings indicate they're almost 500 million shares. So you see them continuing to buy. The shorting is not there. And look at the convergence of shares borrowed and shares shorted. Now you see 190 million shares shorted. Ortex only estimating under 200 million borrowed. They used to have all these surplus shares. So the noose is tightening on the shorts, even though cost to borrow isn't high. There's not all these excess shares floating around. They don't have all these excess shares they borrowed and not shorted to play with. Their options are far, far more limited than they were several months ago because the fundamentals keep lining up against them. Everything they think they're going to bet on, oh, we're not going to get rate cuts. Oh, we're going to get a really hard landing. Oh, SoFi's defaults are going to keep going up. Oh, SoFi's going to have a lot of problems with their balance sheet. None of it's happening. SoFi keeps executing. So the bear case gets harder and harder to make. Now they don't even try to make any fundamental case against the actual quality of the company. They just go, well, the company's great, but it's a dead stock, so just don't buy it. It sucks. The company's awesome. We love the management. We love everything they're doing. It's just a bad stock, so I got a tiny wiener, so, don't buy SoFi. Well, your tiny wiener is your own, sir. CrowdStrike took a shit, so the market will move to the next big one. Sentinel-1 is very cheap and growing. Took a 3K share position. Okay. I'll take a look at it. I don't know much about that company, to be honest with you, Savage. I know, yeah, CrowdStrike. CrowdStrike's a very good company, but I think but even before the whole debacle that they had recently, a couple weeks back, I still think they were just fundamentally overvalued. I don't think their margins. And again, same with Palantir. I know they're an incredible company. I know they do a lot with AI, and I know they could be the next big thing, the next big cheese, the next big flavor of the month and year and decade and the next century. And they could be huge and they could be worth trillions. But their margins are not indicative. They're just the value you're getting today for, you know, vapor is incredible. And the underestimation of the outside sales presence you need to sell that on the consumer side and support it. It doesn't all run itself through AI, guys. These fucking outside salesmen, they need steaks, they need skee ball, they need strip clubs, they need, you know, cocaine, they need Lincoln Town cars. Oh, they need all kinds of things. What's up? Hoping that run up to the high 80s, low 90s by election. Hoping what will run up? Oh, what the hell you guys? I can't follow you guys' conversations. I'm too stupid. When do you think SoFi call premiums? No meat on the bone for the weeklies. There are weak sauce tickers out there with $1 premium. Yeah, yeah, they're not gonna pay. They well then, like, market makers know you guys are selling options, so they might be on the other side of some of these things. Like, they figure out what retail's doing and they figure out how to make money. Yeah, weeklies are barely worth selling. I completely agree with you, Ross. I don't think they are worth selling, to be honest with you. They're both government intelligence contractors. Hold SoFi $17 for January. Okay, 80. Oh, 80 or 90 for Bitcoin. I see. Well, that'd be, yeah. I mean, what would that be, like a 40 to 50% move? Bitcoin can definitely move like that. I don't see anything pushing the value quite that high, but again, Bitcoin does not move sort of rationally. Bitcoin moves with rumors, allegations, and things left unsaid. I was getting 20 to 25 back in March. Hopefully, we're turning the corner and could get back to earning. Wait for $16. It's doable. Okay, guys. Yeah, I think it's been great talking ROI. But it's been a long one, so we'll just have to see what's going on, guys. Pre-market opens up in about let's see. Let's see what's happening at Robinhood. It's got SoFi sitting up 2 cents. It's $7.69 overnight. I have no idea what's going on with the options or with the volume on that. But you can see, guys, I mean, it's done the round trip dip. Like, this was basically right at earnings. It was 775. Where is it today? 775, or where is it going to be? So it did this Fugazi dip. It came right back into line with, where the, it's basically right back here. It was already coming up. It did a Fugazi dip, tested the support that had been forming here, and it's poised for a big move up. Wait, is this moving down all of a sudden? This pre-market flips me out because it goes like all over the place. It's just like, it says like, because it could be like one trade and there's like nobody there to make the market. So it'll be like 730, 780. It's just completely like all over the place, like numbers flipping. So it just kind of freaks me out sometimes. Anyway, guys, I'm a big Karen. I'm startled easily. So yeah, it looks like I predict a very, very strong day today for SoFi. Increasing volume, increasing buying pressure. The economy looks like it's doing fairly well into these rate cuts. And the student loan game that SoFi owns the top of is going to bring really high quality customers onto the wheel that are going to need other things that SoFi isn't even doing yet. Auto loan, not only the personal loan, they have new credit card products coming out, insurance, home loans. That they're going to probably be doing things with other types of lending, small business lending. I know they're doing some small business accounts through American Express, but I would not be at all surprised to see a premium American Express network branded credit card coming through SoFi. Other partnerships with that branding. Obviously, American Express is household name and will increase SoFi's cachet and gravitas sort of right out of the box. Anyway, guys, we just have to see what happens tomorrow. Should be another exciting day. I know I absolutely can't wait. I'll be on pins and needles, guys. It's un poco mas. I really appreciate you joining me. Appreciate you joining us, Savage of Wall Street. Degenerates and simpletons we are, and we appreciate you. Thanks for watching, guys. Thanks for watching Elon Musk News Network. It'll move off a rate cut. Yeah, I mean, they just announced they're cutting rates now, so that's why you're seeing. It's not that complicated, guys. Rate cuts are gonna make huge demand for SoFi. Fair value accounting is gonna spike their profits a ton. It's gonna happen. It's gonna happen for sure. Watch and learn. I don't know. I think it's very, very obvious, but I've been wrong before, many, many, many times. You guys have a good night, and we'll talk at you ASAP, guys. It's a SoFi stock. It's un poco mas. Standing deals. Stock Karen. It's Hurricane Lopez. Blah, blah, blah. Not a lurker, thank goodness, was asleep, but we still like to thank him. And Alberto Berti Aviles was probably out terrorizing teenagers on his Harley Davidson motorcycle. Anyway, guys, thank you for joining us. Jerome Powell is here. To hell with the hell's with the stream at 1 a.m. I don't know, JP. I do what I do. I got Nancy in your DMs. Yeah, see what Nancy Pelosi's investing in. We got to know. Thanks for joining me for the last few seconds. It's really, really helpful. Thanks for showing up fashionably late. Guys, un poco mas. Talk at you later. Peace.